This hour, KPMG staffers who have been forced to resign in a scandal that has engulfed the audit firm may face further disciplinary action. The South African Institute of Chartered Accountants now says if auditors deviated from standards set out by the industry, they could be fined or even be permanently barred from acting in their capacity as chartered accountants. Yesterday, KPMG announced drastic changes as it battles to save itself from the consequences of doing business with the Gupta family, including the resignation of the CEO and 8 other officials. KPMG also withdrew a report on the so-called rogue unit at the South African Revenue Services that raised questions about the leadership of Pravin Gordhan when he was the SARS commissioner, as well as other tax officials. The auditing firm has now been accused of facilitating tax evasion, money laundering and corruption by giving Gupta-linked entities clean audits. But while KPMG admitted shortcomings in reference to these audits, it says an internal probe did not reveal any evidence pointing to criminal intent or corruption on behalf of its partners or staff. Yesterday, businessman Iraja Bidian, who resigned from the board of a company that refused to cut ties with KPMG, called for criminal investigations if necessary. Gordhan has reserved his legal rights and says that KPMG should go much further in compensating South Africa and SARS officials whose reputations were tarnished. And earlier on, the SABC spoke to the Chief Executive Officer of the South African Institute of Chartered Accountants, Terence Nombembe, about the damage that has been done since the report on the rogue unit was first leaked in 2015.
The regulator normally would look at the processes that the institution would have followed, or the firm would have followed, in arriving at this conclusion. Similar to what in this instance, the KPMG internal review has done to basically evaluate from A to Z the processes that were followed in arriving at conclusions on the audits and reviews that they actually focused on. But the only distinction that I think is important to draw here is that the regulator would normally look at issues that relate to auditing or a test function, or put plainly, external audit work. What the internal review has done by the international team, it has looked at the totality of all the work that was provided that gave rise to some of the shortcomings and the remedies that KPMG in their media statement